Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, June 21st, 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see over here in the trend gauge, market leadership, as well as the 5 indexes across the 3 time frames that we track. Short-term 21-day exponential moving average, medium-term 50-day moving average, long-term 200-day moving average, all 5 indexes trending above their leaders bullish, but we did take some hits today. We've had this stop sign up to signify the extended nature of the NASDAQ 100 for 3-4 videos now. The pullback continues. You can see over here what just happened. Pullback day 3. Today, the first time that recent AI tech leaders were hit, some of them pretty hard. So you always wonder when you're extended. When is the pullback coming? You know it's coming. You don't know when, you don't know how hard, you don't know what's in particular is going to get hit. Although we were relatively certain that the NASDAQ 100 was going to be part of that, and also relatively certain that we were going to see some rotation into non-tech sectors. That's what led today, very clearly, non-tech sectors. And the NASDAQ and leading stocks took a hit today. Also saw relative strength from the Dow, mid caps, and small caps, as industrials, staples, base metal, miners, utilities, uh, XLB, basic materials. Basically, what lagged today was banks and AI tech leaders to varying degrees. As I said, we did get a few that took pretty hard hits, and some broke the 21-day exponential moving average. We'll dig into it when we get to the tail of the tape and the charts. But here are the final numbers. RG8, this is our 8 ETF composite, dragged down really mostly by ARK-K, which was dragged down with Tesla being down over 5% on the day. Without this, without ARK-K, the RG8 would have been down about 0.35%, as it was down 0.75% with all 8 ETFs. S&P 500 down 0.52, gap down 0.3%, put in about a 4.5-hour base, tried to break out. The breakout failed. On the breakout, we got to within 3 points of break even on the day, and it looked like things were looking much better, but we sold off into the close. Powell, bearish, hawkish, not bearish, but hawkish, and other Fed heads running their mouths too. Everybody trying to talk down the market, and it succeeded for the day. NASDAQ 100, gap down 0.4, and really lagged all day long. NVIDIA and Tesla got hit hard. NVIDIA came back in a pretty strong manner. Tesla did not, although we did see a late afternoon rally, but total sell-off into the close of whatever we tried to get after we got near break even on the S&P. Dow showed relative strength most of the day, down 0.3. Mid caps late relative strength. Actually, mid caps and small caps turned green by about 0.25%, but sold off into the close along with the rest of the market. Still showed relative strength. Mid caps down 0.12, Russell 2000 down 0.2. Global diversified 60/40 stock and bond was the leader today, down 0.18. In-house GROTECTION down 0.88. Some of the recent leaders that led to the outperformance that we've shown versus the S&P took some back today. NVIDIA, Tesla, and AMD, really a terrible day for AMD today, breaking the 21-day decisively. We closed our full position on that, including over 30% gain from our original buy back when it was back around the 90 area, but nobody wanted to touch that stock today. We'll get to the tail of the tape and then through charts of interest. Let's dive right into it. Active management is what we do here at Revere. When you're below this big black line, that's the 200-day moving average. This is when market is risky. It's historically just a fact. All bear markets occur below this black 200-day moving average. Usually from the high until you break it, you're anywhere from 10 to 12%. The bear market from 2022, we started about 11% from the high. And when we get back above there and back above the shorter term and medium term moving averages, we have varying degrees of uh, exposure to the market. We've pretty much been maximally exposed, give or take 10, 15% cash for hedging and some that we have into bonds. Expecting this 3-day pullback. Today, the worst of the 3 days, so giving some back. It's normal to pull back to the 80 MA. It's normal to pull back to the 21. It's normal to pull back to the 50. You just don't know how much of the strength is going to be maintained in the pullback. There's been a lot of people saying that this is just a 7 stock rally. It's not. There's been rotation into other sectors. We have no problem finding leaders above the 21. In fact, our group from last Friday was the strongest that we've seen as we were doing our sector rotation with the percentage of stocks above the 21. But maybe that's just a signal that we're too extended and it's time to pull back. And that's what we've got starting with Friday and continuing Tuesday and Wednesday, the pullback. As far as are we still extended? Well, we're basically right on the ADMA. 1.6% from the 21, 4.2% from the 50. We were as much as 6% from the 50, which is on the extended side and also on the stop sign side. But some relative strength today because of sector rotation. When you've got the Nasdaq 100 down 1.4% and the S&P only down 0.5, that money isn't exiting the market; it's flowing into other sectors, and that's again why we like to hold on to SSO. Well, we got a email recently about doesn't I've heard SSO is bad because of contango. SSO has nothing to do with contango. Contango is when you're talking about futures contracts and rolling over. There's no futures contracts uh, involved in the SSO drag. Yeah, it is reset. There is some decay when you're in a chop fest, but we monitor that, and it just means that sometimes we add a little bit more to SSO to get back up to the 2 times that we're targeting. So yeah, there is some decay. But if you know what you're monitoring and you know that you're not going to get the full 2%, recently read a good study about how 3% does have excessive uh, decay to where it might impact performance, but the 2 times is kind of the sweet spot. It was some complex math, but it supported what we do was the bottom line. Uh, so there's your S&P 500 sitting on the 80 MA right now. Let's go to the NASDAQ 100. We broke the 80 MA, 0.3% below. Uh, so yeah, that indicates that we have seen some relative weakness, which you can see here by the relative strength line. Not a surprise considering how strong the Nasdaq 100 had been. So for now, one closed below the 8. We got one closed below the 8 back on 6.7 which was the last time that we sold off more than 1% on the Nasdaq 100. And today down 1.36%. So, uh, multiple steps up, a couple steps back. That's what we've been seeing here. This has been the clear leading index. Will it continue to be? We're going to let the market decide that. We don't ever make predictions. Did it go too far, too fast? Very clearly it did. And that's why we've had that stop sign up when we closed on the 15th at 11.6% above the 50-day. Right now, down to 8.1% above the 50-day, which is still historically stretched. When you get over 7% on the NASDAQ, uh, it's pretty much a red flag. So we're uh, looking for some sideways movement now to let these moving averages possibly catch up. But the market does not always give you what you want. Let's go to the Dow, which showed relative strength today, as it's not anywhere near as tech heavy as the S&P and the Nasdaq 100. Close below the 80 MA, above the 21 and the 50. Pretty much a normal pullback. A little bit of relative strength today with it just being down 0.3%. Mid caps, and all these indexes still above their 21 despite the 3-day pullback. Riding the just below the 80 MA are mid caps above the 21. Again, normal 3-day pullback after a nice move up. Relative strength has been lacking for 2 weeks now on mid caps after this nice spike up off the bottom. But this is a pretty good setup. We like it. Some relative strength today, relative strength into the close the last 2 days versus the bigger cap counterpart indexes. So let's see if that can continue. We do have a TNA position, which we are uh, three different buys we've done. The first one is up nicely. The second and third are down slightly. So we're keeping an eye on that. And speaking of TNA, that's the 3 times IWM. You can see here, this is tried to get back above the 8, couldn't quite make it today with the sell-off into the close. Still consolidating this pretty strong 4-day move up. The broke the bottom, as I mentioned yesterday, of this 184.22, but did close at 184.70. So closing back within that range both days after undercutting, and again above the 21 EMA. Uh, Not looking bad. Again, 2 weeks of relative weakness after a strong 4 out of 5 day move up, normal pullback. We do need to see banks and oils cooperate. Oils were strong today, banks weren't. We need to see some cooperation from the banks if we want to see this start to outperform. So let's go to the VIX. This was kind of odd today. The VIX, despite varying degrees of sell-off today, the VIX was red all day long, making new closing lows, down 4.9% all the way down to 1320. But again, we traded in less than a 0.75% range today on the S&P. So the VIX is reflecting volatility. You're not getting volatility. You're getting a downside uh, move, but it's not very volatile. We had a 0.3% gap down in closing, down 0.52. We traded in a pretty tight range all day. So the volatility isn't there. We're just taking a price break. Let's go to the UUP. This is the dollar. The US dollar started the day slightly positive, ended up down 0.46. Stocks really didn't respond that much to it. You can see here the dollar down and then another leg lower in the afternoon. This really didn't sync much with what was going on the indexes, and we were very tight into the close on the dollar while we were selling off on the indexes. How did this correspond to the precious metals? Or if you looked at silver, you certainly weren't happy. Breaking the range, closing at the bottom of the range, but down 2% on the day. Uh, GDX and GLD were weak pre-market. They gapped down, they closed near the top of their range, down 0.27% on the gold miner. So you can see it undercut this 30 area, which has been big support, but it reclaimed it by the end of the day, just barely, but it still did. So that's the second candle in a morning star if you're looking to be bullish on gold and gold stocks. GLD closed below that 180 level for the second time. Uh, Undercut, then got back inside the bottom of this range, oversold, maybe a bounce there as the dollar. Um, let's look at the dollar once again on the chart so you can see pulled back and now has broken, tested, and confirmed the break of the 21 EMA. So dollar going lower, and you know that that impacts the precious metals. But what it didn't impact today certainly was Bitcoin, which has had 3 very strong days now. So somebody watching the videos was kind enough to comment that the big brokers are backing a new exchange for crypto, and that certainly gives it some legitimacy. We've also had one of the big brokerages submit their application for spot Bitcoin. Will that one get approved? Well, it'll reek of politics if it does, because multiple other smaller ETF issuers have submitted over as much as a year ago, submitted paperwork for a spot Bitcoin ETF and all been rejected. But you know how politics is these days. It's who you know. So anyway, Bitcoin, another day, it's back above 30,000, I believe, up 7% on the day. Very big move for Bitcoin. Let's flip to bonds now, and we'll start off with the broad bond index. Bonds with a reversal today. Let's go to the 5 minutes. So they started out gapping down Powell's prepared statement was issued, but they showed strength all day until like the last hour with a little bit of a flag. So a reversal on price and yield started out one way, went the other by the end of the day. Bond prices were up and bond yields were down slightly. There's the BND, that's the broad index. TLT is the long-term bond, and you can see this trying to break above these moving averages, but has been stymied 3 of the last 4 days. A higher high here would bring rates down even further. Let's show those rates now. We'll start with TNX. This is the 10-year, still in a range, and the 30-year TYX also in the range, but at the bottom of this upper range that it formed after breaking out here. The ranges are kind of overlapping here also, but you can see basically this has the 50 and 200 as support, while the yield has the 50 and 200 as resistance. And those are all the inter-asset correlations that we do on a daily basis. Let's go to the tail of the tape now. You can pause this if you really want to dive into it. The news I mentioned, Fed Chair Powell hawkish. He was hawkish on rates. He was hawkish on inflation. He wants the economy to slow down. None of that made the market feel any better today. Anytime there was a rally, there was a late afternoon or a early afternoon rally, and then a late afternoon sell off. But was it Powell? Was it just time to cool off? We don't know. We just observe what the price action is. And we're expecting the pullback. We've got day 3 of that downtrend now. You can see here 4 up days, 3 days down, and a 13-day rally right on the 80 EMA, 17th day above the 21 EMA. Enough already, I guess, is what the bulls are saying, but there is a little bit of room to continue to pull back further. Quite obviously, my preference would be for a little bit of a sideways move so we can see the stronger stocks that want to continue to hold the 21 and the weaker ones that don't. Uh, Sectors today, Bitcoin, oils, and ITB home builders strong. Bond prices and bond yields flipped by the end of the day. Tech Week, XLC, XLK, XLY, the dollar, semiconductors, IGV, KRE, regional and big banks, and cybersecurity stocks. So things that have led lately got hit today. In the portfolio, we talked yesterday. Our expectation was that yesterday's lows would hold with the 60-minute stochastic cross on the indexes. It didn't hold, so we put our hedge back on with the gap down and the lack of recovery. We sold AMD, very weak today. We'll take a look at that chart in a minute. We bought Caterpillar as this had a nice multi-day rest after money started flowing into industrials about 2 weeks ago. So the bottom line for the day, pullback day 3, tech sectors all hit hard, including AI leaders. We'll see what Thursday and Friday have traditionally been strong in the most recent couple of weeks, but we are in a two week period for the overall market from a seasonality standpoint, something we're wary of. And we've had about a 1.8% drawdown off the high. The S&P has drawn down about 1.4%. Our beta is higher than the S&P, so that's kind of expected. We're hedging as appropriately, but we did get hit a little bit harder than we expected today on Tesla and AMD. Let's look at a couple of charts here, and let's start with AMD. Nobody wanted this today, period. In fact, it seems like nobody's wanted it since the big reversal off of their uh, investor day back on 6/13, which was at the time pretty impressive. The market was fairly impressed, but when they were finished, now you can see the action. You don't argue with the action, and when it broke below this these lows of this base that it put in, that corresponded with a break below the 21 and the 21 rolling over. You can see on a 15-minute chart here. Uh, Here's the area. Well, let's go to a little bit of a longer chart here. You can see this area here that should have held the bottom of this base, but it broke through it like a knife through butter, didn't even put up a fight. Yeah, we know it's extended to the downside on the 30 and 60-minute, but you still obey your stops as things can continue to get more oversold. And this was not a good look at all for AMD today. So we sold it. We booked, I believe, 30% on our last buy, which we got back in the 90s. On this initial move up here that said they were partnering with Microsoft. Then they had a very nice run there, big gap up on the NVIDIA earnings, put in a nice little U, but then that's it, 613 sell off. This is why you obey your stops. Tesla, after being just extremely strong, had a pullback day today, but even with this pullback being down 5.5%, it hasn't touched the 80 MA. We sold some when it got really extended around 250 last week. Uh, just has continued to go higher and get more and more extended. It's still, let's see, it's still about 3 to 4 ATR above its 21, so it is still extended even after today's pullback. Our preference, obviously, is for it to bounce at the 80 MA, go sideways for a little bit, let the moving averages catch up. Same thing that we want to see with the QQQ. So what did work today? Uber got an upgrade, gapped up, sold down to the 80 MA, bounced. This is our biggest position in the portfolio. It's nice to have your biggest position up on the day when some other things are selling off. But let's take a look at some recent leaders that did get hit more on the hard side today than you certainly would have expected. And we did show AMD already. You, a recent leader, third day down after the false breakout, closed under the 80 MA, still above the 21. Let's see, Palantir, another leader, second day down, bounced at the 21. We actually considered a low risk entry for this, but with the NASDAQ 100 still being as extended as it is, and it being the second day down, we really didn't want to put much more tech money into the market today. So Palantir, pretty big sell off there. We showed Tesla down 5.5%. AI was down as much as 12%, down for the third straight day, down 9.6%. Did hold the 21 EMA today. So let's show a couple of others that held the 21 nicely and might be setting up for good low risk entry points if the market, if tech stocks stop going down. So AEHR tech stock, semiconductor equipment company. Not too many tech leaders didn't make a lower low today relative to yesterday, but AEHR was one of them. Had a tight inside day on lower volume. Second day holding the 21 EMA. Net held up most of the day, but broke the 21 and closed just below it by the end of the day. But notice the light volume the last 2 days and really the last 5 days. So it's pulling back, but it's not being distributed while it pulls back. The trade desk, this hasn't even touched the 21. This is holding up very well at the 8 EMA. We showed Palantir, SMCI, another big recent winner. That was down 1% today, but has really been down 4, 5, 6 of the last 7 days, holding the 21 though. 21 is a big support area for leading stocks, especially if they want to continue their leadership status to stay strong. ON Semiconductor, after breaking out, has pulled back right to the 21. ENTG, not much discussed, but another strong semiconductor basically closed right on the 21. Monday, software stock, leader, uh, consolidating after its breakout, undercut but reclaimed the 21 by the end of the day. DT, something we own, still undercut but held the 21 by the end of the day. And DraftKings has showed 2 days of relative strength, undercutting but reclaiming the 21 day both days. And ELF had a very strong follow through to the upside today, up 4%, breaking above this 3 to 4 week recent resistance with volume. Those are some of the stocks that we're watching. If the correction or this pullback moderates and gives us nice low risk entry points going forward. That's going to wrap it. As always, like to hear from you. You can reach me, Don at RevereAsset.com. My partner, Dan Stewart, Dan at RevereAsset.com. The phone is 855 Real Wealth. That's 855 732 5932. And with that, I'll remind you, it's not how much you make in the market, it's how much of that you can keep. That's why we're in hedge mode right now and taking profits mode as things pull back. If they're pulling back abnormally, A lot of them pulling back just quite normal after being extended. AMD certainly an exception today, so we had to cut that one loose. As I said, not how much you make in the market, it's how much of that you can keep. And with that, I'll wrap up Wednesday's video. For June 21st, this is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening. Have a great day.